best in radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome, and you're listening to the Financial Survival Network. It's Kerry, Lutz, and markets. Hey, you want to die an early death, just keep looking at those charts and keep wondering coulda, shoulda, woulda, and you are going to you're going to dig yourself a grave, that's for sure. But if you want to make money on the technical side and you want to try to make some sense of it, well, then go to the goldanoilguy.com. We've got Chris Vermeulen on with us now. And hey, he's started his quest when he was 16. He got hooked on the markets and he knows how to make money out of it. Chris, how are you?
Good afternoon, Kerry. I'm great. How are you doing today?
All right. So, hey, we talked last time and you were quite prophetic. You said that you thought there was, that gold was probably going to break on the downside, and because it had been kind of in a channel, as you technical guys like to say. And here we are, month and a half later, and gold and silver more or less have followed course, right?
Yeah, simple technical analysis. Yeah, silver's done the most damage, obviously, but the short-term charts there a couple months ago when we talked last were very bearish, and simply we've seen gold and gold mining stocks, they've really taken a hit. They continue to grind and poke to new monthly lows here the last couple of weeks. But silver's really done some serious damage, breaking down a major new low, and it's kind of in free fall mode, trying to find some footing. It's having a little bounce today, but silver long-term chart, if you were to ever look at the monthly chart, is very scary looking. And I don't try and trade silver too much simply because it's very volatile. I focus on gold and the miners because they're a much cleaner chart, not quite as manipulated as silver.
Yeah, well, the silver market is so small. It's so easy to get taken out and burned on it. If you're not holding the physical, then, you're just going to get stopped out so easily because, that's what they do, right?
Yeah, exactly. Well, silver's so thinly traded. The market makers, the guys in there with the big money, the chart is very tough to trade. If you're a technical analyst and you're looking at price action and pivot lows, pivot highs, where you want to put your stops and put your targets, these market makers who control more or less the main volume for like silver specifically, you can see them just more or less running the market to run these stops, get you stopped out of a trade, and then boom, it just reverses course and it goes on to hit your previous target. They do it over and over again. Silver is probably, in my opinion, one of the hardest commodities to trade.
Silver and nat gas, right?
Yeah, exactly. Nat gas is right up there. Yeah, I agree.
Yeah, the widowmaker, as they call it.
Natural gas it's probably a little bit harder simply just because you've got the inventory every Thursday. It always creates one heck of a blip on the chart. So
yeah, but at least nat gas, it's manipulated, but the market is so huge that you might have a fighting chance. Silver, on the other hand, forget about it, right?
Well, you know what? Once the trend is set in, like if you were to be short in the silver market, it's a great play, but you can't be short term really trading silver. And when you're in a full blown bull market, silver's the one you really want to be in. Initially, silver usually performs first. It's usually the first one to really take off. In most cases, not always, but usually you'll want to wind out of your silver play after you've made a good chunk from a move, whether it's a move to the downside or the upside, and then you want to try and transfer your money over to gold and gold mining stocks, just because they can carry the momentum further, longer, and you don't want to be holding silver once you start to get some big moves under your belt, simply because you can give it all back in a blink of an eye with silver.
Yeah, it moves so fast. But at some point, they reach their bottom, right? And they're just not going to move anymore.
Yeah, exactly. And gold and silver, they are trying to put in a bottom. The silver chart, it looks like it's trying to really run the longs out of the market. So all the investors who have been accumulating over the last year and a half, this break to a new low has really caused a high volume surge. We've just saw a flood of sell orders hit the market, and people are slowly unwinding. It usually takes the whole world there of investors of silver usually takes a good 3 to 5 days for all that panic selling and for the news to catch on to the average investor on the street going, silver broke to a new low, it's down, it's broken an all-time multi-year low. By the time it gets to that last investor, you're talking about 5 days down the road. And that's what we're starting to see now is we're just seeing that final flush of the slow kind of traders, investors who are trading pure off emotions and news. They're all slowly getting flushed out here and exiting their positions. Gold, on the other hand, is still holding a critical support levels. The chart pattern is starting to show some pretty good volatility in the last 2 weeks here, showing that the bulls and bears are fighting for control, which is a good sign. We're seeing gold settle down near the lower end of its range. The selling hasn't stopped yet. There's still got downward momentum, but it is showing signs that we're getting close. It looks as close to a bounce here.
Yeah. So bounce, and when right now, obviously, we're in a down cycle. What do you think the crucial number is to say that a buy signal, buy signal's been issued, if you will?
Yeah, it really, if you're an investor and you're looking for the big picture, you really need to wait for this basing pattern that's formed over the last year and a half to be broken out of. And that really, for gold, is around the $1,390, $1,400 per ounce level. It's a long ways away from where we are now, but that's where the upper end of the range is. When it can break above that and hold, then the sky's the limit. We could see it go all the way up to 2,000, 2,500. The sky really is the limit for how high gold can go, how bad the economy could get. But until it gets broken above that level, long-term investors, you're really trying to pick a bottom here, and this might not be the bottom yet. So it's like catching a falling knife. You don't really want to do that. If you're more of an active trader, I think we're getting close to a major low in gold, but we've got a big problem here with the U.S. dollar. It's been rising, rocketing higher the last 3 months, and it still has potentially another 2 weeks or maybe even a month of higher prices here. If we see the U.S. dollar index spike up to 87.88, which is bringing us back up to the 2007, 2009 highs for the dollar index, I think that final surge in the dollar is going to create another down wave in precious metals, really flush out the precious metals. And then I think we'll see the US dollar reverse and fall. And I think we'll see money start to rotate right back into precious metals. But I think a lot of people are still holding on and dreaming that this is the bottom for gold. And I think gold needs to flush those investors out, which if you compare what's happening with the US dollar index, the price action of gold and silver, it looks like we're going to get one more downward kind of flush out in gold and silver, and the dollar is going to jump, and then we're going to see it quickly flip directions, everything reverse again. But I think the market's going to get another shakeup still.
So they're dreaming of a gold Christmas, which may or may not show up here, huh?
Yeah, exactly. Yeah. That's about the timing, though. If looking at the charts, or sometime by year end, I think we could see the bottom definitely get put in here. It just might be really ugly until that point actually happens.
Yeah, well, and if you're buying the physical, then maybe that's okay. If you're in the paper market, then you got to be ultra careful, because you can get stopped out of there and you can just get totally decimated, right?
Yeah, exactly. And I've been shopping around for where to buy gold and silver, and because I do want to accumulate some actual physical metals just for long-term investments for the family, for the kids, just as diversification. And I'm getting closer and closer to wanting to pull the button to go and buy some bars and some coins, but I'm still just kind of waiting, just because I'm a short-term trader. I can be a little more nimble.
Hey, well, do you believe that the physical demand is really still strong here, Chris? Or do you think that's just anecdotal stuff that's put forth by the dealers, by the bullion dealers talking their book?
I really don't know how to take that. It's so hard to tell what's true and what's not out there when it comes to all that stuff. I haven't heard really anybody talking about wanting to buy gold and silver coins. Everybody I've talked to or that I get emails from say they've already bought them. They've been holding on to them for years. So I don't know how high the demand really is. And I think that's probably part of the reason why we're seeing gold and silver fall. And, a lot of people want to have a solid story. The gold bugs want to always be saying, there's huge demand, all that stuff. But really, when push comes to shove, I don't hear a lot of people going out talking about buying coins right now. And the prices of gold and silver are falling. So it just supply and demand just goes to show there isn't a whole lot of interest right now. Of course, gold and silver are trading multi-year lows here. It's not that exciting, but when they do turn around, I think there's going to be one massive flood for everybody to get back into gold and silver. And I think that's when things are going to go AWOL with the coins and bars, and we'll see real heavy demand for it.
And this is a technical guy talking about this too, which is fascinating to me because that's obviously where you make your money on the trading end, and a lot to be seen there. Hey, when we come back, we'll be talking about other markets, oil, the dollar, and even the Canadian dollar on the Financial Survival Network.
FSN Radio. It's all about what's next.
Every week the show is growing. Would you like to be a part of it? Then go to clubfsn.com and help support us with $1, $2, $5, or $10 a month and get a host of premium content with newsletters dropped into your mailbox, free books, private audio clips, webinars, and much more. Then join clubfsn.com. If you want to get ahead of the trend and ensure your family's financial security before it's too late, go to clubfsn.com and sign up.
The Financial Survival Network. It's all about what's next.
And in case you just joined us, Chris Vermeulen's with us right now, gold and silver guy, and we're talking markets. So oil, what's going on with oil? I mean, same thing with the dollar, huh?
Yeah, pretty much. We're seeing oil has been taking a beating, and it's actually starting to look like it's trying to put in a pretty good bottom here. And we could see oil go all the way back up to the $104 mark. We've seen some extreme volatility over the last month and a half. Price just keeps gyrating between more or less $95 and $90 a barrel, and the volume is heavy, and this is usually a sign that the bulls and bears are struggling for control here. And the fact that we're settling down into a long-term support zone, high volume support zone, it looks as though we're going to see some type of bounce in the crude oil market.
Mm-hmm. And yeah, I mean, that's like we've been seeing it go back and forth here in this range, although it went a little bit lower, kind of went down right to that $90 range there. And, I mean, it's kind of been directionless here, huh?
It is, yeah, which is fine. This is, the more something trades sideways, the stronger the next move will be. And it looks as though crude oil is trying to carve out a bottom. And if it carves out a bottom and has a bounce, we're going to see a really nice rally to the upside. If this level breaks, if this $90 per barrel level does break down, then things are going to get really ugly. We're probably going to see $85 a barrel really quickly within a couple days. And I think that could be the start of a major downtrend in crude oil, and that's going to have a major effect on the Canadian dollar. The Canadian dollar is very related to the price action of crude oil, and if crude oil falls, we're going to see the loonie just tumble, and that's not the best sign. I'm being Canadian, but it's all right.
So what are you going to do?
Yeah, exactly. There's ways to play that.
Yeah. And the loonie and the Aussie dollar have been in really weak over the past year and a half. They've been in really low, weak against the U.S. dollar.
Yeah, it has been very weak. And I actually did a long-term chart scrolling back years. I did an update on my blog there with the Canadian dollar and just how it tracks with more or less crude oil and how it's starting to break down. And there is potential that if crude oil breaks down here and the U.S. dollar continues to, I think it's gonna have a pullback in a little bit, the U.S. dollar index, but in the long run, I think the U.S. dollar is heading higher. I think we could see $1.25, $1.30 exchange for the Canadian dollar and the U.S. dollar again, which is going to be, it'll go right back to the good old times when going on a holiday to the States was expensive because it cost us almost $1.50 at one point there to convert Canadian dollars to U.S. dollars.
Yeah,
but
that's not good for Canada for sure. See that go. Yeah. I mean, and could be saying some bad things about Canadian real estate, right?
It'll have a major effect across the board. Eventually, it'll all kick in, and it won't be the greatest. But that being said, when our dollar is weak, we do get a lot more industrial work coming over here.
Yeah.
We lost a lot of that simply because the U.S. pulled a lot of their workers and factories back. But if we go back to $1.25, $1.30 exchange, sure is a heck of a good discount for factories to be producing in Canada again, and other all kinds of different industries were really strong in Canada at one point. The exchange definitely killed that industry, but it could come back.
Yeah, it does make the economics, for exporting some U.S. jobs worthwhile for sure. Probably even some jobs from Mexico as well. And yeah, definitely. So, and your real estate market has been in bubble territory for years already. And it's really about time for that bubble to pop, isn't it?
Yeah, it's been very strong, especially in Toronto area and Vancouver. It's insanely strong. I live in a town where we've got all the people from the city seem to move and retire where we are located. And of course, you hear the stories of, they bought their places for $500,000 or $750,000 and they're selling them for $1.72 million. Now it's incredible. And some of the cities like Toronto has stopped making any green space. So now you just can't build anywhere. You have to build further out of the city. And it is just, prices have exploded to the upside. Eventually that has got to pop, and I don't see it happening anytime real soon. I think we really need to see a major flip in the market direction. I think when the equities market, the TSX, the Toronto Stock Exchange, I think when all that stuff, the U.S. markets all start to go into a bear market, it'll be a delayed reaction, but eventually everybody's going to tighten up. And I think all these bubbles will start to deflate pretty quick. But I think we're still 6-8 months away from any of that really grabbing hold of the average person and influencing the overall market.
Great point. And yeah, we see it on these all these real estate shows that get filmed in Vancouver, and these places are shacks. I mean, they're really shacks, and they're going for huge money, even by U.S. standards. And, you just can't believe how much these places go for.
It's wild. Absurd. Yeah. You spend $500,000 for something that needs to be completely redone, roof, wiring, plumbing, walls, everything. And it's just, it's unbelievable. You're buying a skeleton. That's all you're buying, and location. But you don't get much anymore. Everything is just so expensive. Nobody wants to give up their real estate. And those who do, it's usually because they have to of some reason.
Or they're moving to Mexico. Retirement. So stock market, let's talk about that. It's been a bubble. Everybody's saying bubble, but Martin Armstrong saying flow of funds from all over the world because there's no other place to put your money. So far, he's been right, and the rest of the world's been wrong. Yeah,
well, the market has been on a tear, is just on a nice 45-degree angle, just keeps on trucking with these corrections. They were talking on CNBC how the market's really only had about a 5.5% correction since 2010, I think it was. And other than that, they're saying, they keep calling for a top, but really the market, on a technical standpoint of view, 45-degree angle is something that can go on for a long time, especially when you get these multiple bounces in the market, these little corrections. They rejuvenate the market. The market just keeps bouncing and going up and up and up, and who knows when the top will be. That being said, we're at some pretty serious extreme levels here in the overall market. We're seeing Russell 2000 completely underperform. We are seeing lots of stocks actually hitting new lows. The market breadth, the internals, the health of the overall market is really bad. But just because it's bad doesn't mean the market is going to roll over anytime soon. The market can be bad for 6, 8, 12 months and keep getting worse every month before the actual major indices roll over. And we're about 6 months in to things that have been, clearly getting worse and worse. And in the last month and a half, things have gotten extremely bad. But again, we're still in an uptrend. The market is still climbing up, and there's no point in trying to pick a top. Eventually, we're going to get a very sharp correction simply because we've been going up this 45 for so long in a very tight little channel. And when that breaks, it's going to be ugly, and we're probably going to see a 15 to 20% haircut within really only a week or two. It'll probably be something very severe, very sharp. And but that's just how the markets move. There's nothing to really panic. Even when we do get a 15 to 20% correction, and if that is the start of a bear market, there's nothing to be a huge panic. We're going to get some type of pause or bounce after that correction. And depending how the overall health of the market recuperates from that, we can figure out whether we should be looking to short sell or make, so we can make money when the market again turns to the downside and starts declining for the next 12 months, or should we be looking to buy? And as an investor, we've got lots of time. None of this is really going to take place. We're not going to know we're in a bear market for months and months and months, and we need this 20% correction, and we need to see what it does after that correction, what the market does, the health of it, the price action, before we can say, okay, there's a high probability the market is heading lower. This looks to be a bear market. Then you go from there. But everybody gets so worked up that there's a huge correction coming. But for the average investor, it'll be an early warning sign. Yes, you give back some of the gains that you have over the last 5 years, but that's fine. You got to wait for the bear market to take place before you can decide to exit positions and then get into new positions to profit from a falling market.
Oh, for sure. And hey, Chris, just tell us about your site and subscription offers, how we sign up.
Yeah, if you want to get an understanding, I do a daily video of the markets every morning for my clients at thegoldanoilguy.com. And there I do a market recap every morning of what happened overnight. I talk about gold, silver, mining stocks, the major indices, real estate, talk about crude oil, natural gas. I cover the main topics of what we're looking for in the current day, what to expect like today, and then what to expect about 5 days in advance, and how we're going to look to play it, and what type of setup we're looking for to get into new trades and play short-term market moves.
All right. And hey, you find the link over to Chris's site on financialsurvivalnetwork.com. Don't forget to sign up for a newsletter. And Chris, always a pleasure. And it's going to get interesting real fast, I have a feeling.
It is. Yeah. Thanks for having me on the show, Kerry. Appreciate it.
FSN Radio. It's all about what's next.
Every week, the show is growing. Would you like to be a part of it? Then go to clubfsn.com and help support us with $1, $2, $5, or $10 a month and get a host of premium content with newsletters dropped into your mailbox, free books, private audio clips, webinars, and much more. Then join clubfsn.com. If you want to get ahead of the trend and ensure your family's financial security before it's too late, go to clubfsn.com and sign up.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.